Welcome to Season 3, Episode 2 of the Ag Policy Podcast. I'm Josh Baethge. I cover U.S. food and agriculture policy for Farm Progress. Today I'm going to be chatting with Rob Baker, a corn and soybean farmer from Mississippi. His family's roots in agriculture go back in that area for 5 generations. Rob is also the Mississippi director for the American Soybean Association. Thanks for joining me today, Rob. How are you?
I'm good. Good to be here.
I guess before we get started, just tell me a little bit about your farming operation. Like we said, you grow corn and soybeans. Just tell me a little bit about your farm and what you do there.
Yeah, we grow corn and soybeans on about 4,000 acres in the Mississippi Delta. I have been back on the farm for, I guess, next year will be my 18th crop. So I've been doing it a good while. We have a good operation. It's not without its share of challenges like anybody else. We had a good harvest this year, had a good yield. Obviously, prices were not where we would have liked them to be, but we're glad to get on the other side of this one and maybe move into hopefully a more profitable 2026.
Now, I mentioned you are a fifth generation farmer. Has your family farmed that same area of land, or been in the same area for that long?
We have. We've been in the same area for basically 110 years now. So we have roots established deep, and it's been good to us, and we've been good back to you.
So you mentioned there that prices this year have been lower than you'd like them to be this year. Can you talk a little bit about how this year business wise compares to last year, the previous 3 or 4 years?
Less profitable than the majority before them. And it's not that we haven't dealt with lower commodity prices in the past, but typically when we deal with low commodity prices, our input prices trail down along with them. And so you're not faced with a situation where you're paying high input prices paired with low commodity prices. And in the past 2 years, we've had, input prices at all-time highs while having to deal with low commodity prices. And on top of that, we're also facing, for a lot of farmers my age, the first time we've had to deal with high interest rates on operating loans and equipment loans. And it's kind of been a new frontier for people my age, having to figure out how to really manage those higher interest rates. And the three things converging together have made a difficult situation.
Sure. It's almost kind of like a perfect terrible storm, if you will. Let's talk about the input prices first. Now, I think this is something that has been trending upwards for the last several years. Is that correct? I know they've spiked this year, but we've seen higher input costs for a few years now.
It's basically been just an extension of COVID. In COVID, a lot of these input prices spiked, and the expectation was they would come back down, and they have not typically followed that path like we expected. We are facing higher input prices, such as fertilizer. I think I read something the other day where phosphorus is the most it's ever been in comparison to a bushel of corn. And then equipment obviously is a huge factor. Equipment is as high as it's ever been. But another thing you don't think about with the equipment is our repair bills and our parts are higher than we've ever had to deal with. The repair bills, that's part of just an increased labor cost that's been spread across the board. And, I've been going through my end of the year notes, and my repair and equipment is the highest it's ever been by a decent margin this year.
And as far as the equipment, is that more due to just, again, perfect storm having more issues than normal, or is just the cost of repairing your normal, maintenance more than it has been in past years?
I don't think I'm breaking down any more than I have in the past, but parts are higher due to, I guess you got tariffs on your parts coming in. Your service is higher because just labor in general is probably 150% of what it was back in 2020. That's something that basically everybody has to deal with, and so that gets baked into every input cost you have, that higher labor figure.
Across the country, a lot of farmers are seeing a shortage of labor. Is that what you're seeing in Mississippi as well?
My area of Mississippi definitely has its labor challenges. My farm in particular, we do not have as many challenges. We have a good crew that's worked for us for years, but all of our neighbors, they run into significant, difficulties in hiring good help and having people that can do everything they need to do on the farm.
Now you mentioned commodity prices as well. Give us an idea of how corn and soybean commodity prices right now compare to how they did. I know you mentioned COVID. You go back to 2020, and even just compared to last year. What type of difference are we talking about here?
You really got to look at it kind of baked into the last 2 years. The last 2 years have basically been mirror images of each other with low corn. Basically when take our harvest. Our harvest is in August and September. And when we were harvesting our crop, corn was, in the low 4s and soybeans were in the low 10s. Now you had opportunities throughout the year to book a little higher than that. If you booked wisely throughout the year, you probably could have gotten 1050 to 440 on corn. But those numbers are corn probably needs to be closer to 5 to 550 to be profitable, and soybeans need to be in that 1150 to 12 range. And we just have not, we have not seen that the last 2 years.
Yes. So when you take all that into consideration, are you even going to be able to make a profit this year? I hear a lot of people, particularly on the soybean side, are actually losing money, on this crop year. What's your outlook look like?
A lot of people around us are not going to make a profit this year. I think, right when we went into harvest, kind of some local economic groups started sounding the alarm on bankruptcies being just on a trajectory to be higher than they've been since the 1980s.
Now, on the political side, we hear a lot. You mentioned tariffs earlier. Soybean farmers in particular are very dependent on exports, with China being by far the largest market. From your standpoint, the local level, do you feel that impact directly from when tariffs came in to the demand for soybeans? How much of that can you attribute on your end to tariffs?
So we feel it enormously in my region. We send all of our soybeans to the Gulf, and so every bushel of soybeans we produce is sent on a barge to the Gulf that goes abroad. And when we were harvesting, there was zero demand on the Gulf for soybeans. Taking that Chinese piece out of the puzzle really made it where there was not an appetite to buy soybeans at the Gulf of Mexico. We typically have a strong basis here, which is, the price we get off the board compared to other regions due to where our soybeans go and how they're transported. And with that lack of demand at the Gulf, our basis was the lowest I can remember since I've been farming.
So with that lack of demand, where do these soybeans go?
So local elevators held them until, they had the entire collective community had soybeans that were already booked. So those soybeans were shipped out and to their destination that was already predetermined. The beans that were not pre-booked, they stayed at the elevator for a while they were trying to find somewhere for them to go. And eventually they did, they were able to ship beans out and found destinations for them.
Yeah. What about on the corn side? On the corn is slightly less dependent on exports, compared to soybeans, but it's still an issue, right? In terms of finding, having trouble getting these, finding an export market for corn. Is that the case, or is it a little bit better situation there?
Export-wise, corn this year, I believe, had one of the best export years it's ever had. I think corn export demand is actually strong. The problem is when the soybean demand isn't there, nobody wants to plant acres of soybeans. And so we had the highest number of corn acres planted that we've ever had. And so you have a situation where one of them is a ball and chain on the other one,
Right. The ball and chain on the other one. So, we're almost getting through. How are you at harvest at this point? Where are you in your cycle? Sorry, I'm not familiar with this.
So we're done with harvest. We finished harvest by the end of September. We're so far south. We're ahead of the majority of the country. We harvest early, and we've been doing field work for a month.
So now I guess, are you moving on to planning for next year? What do you have planned for next year? Any changes, to adjust to what you anticipate the market looking like in 2026?
That's a good question. We were heavier corn this year than we've ever been, and Looking towards next year, I expect that trend to continue, depending on where this fertilizer ends up. I'm hearing numbers on nitrogen for corn potentially being 10 to 20% higher than last year, and if that's the case, it's going to be hard to keep pushing that corn number up. And beans may look a little more appealing. We got good news this week on the China front. We think we're going to have an agreement signed in the near future. The market has liked it so far. We're hoping the market will keep liking it. That was a great win for the administration, and I hope the market continues to bear that out.
Yeah, and just for our listeners, when you're talking about this week, we're actually recording this on Halloween. Up until this week, I believe, correct me if I'm wrong, Rob, the U.S. had not exported any soybeans to China. This week, President Trump met with President Xi in China, developed a framework for a deal to lower some tariffs, and around the same time, China agreed to purchase some soybeans. And I think the hope is that that's going to get back on track. And like you said, it's positive news, and this could eliminate a lot of these issues that we've been talking about here. Is that right?
That's correct. This week was the first shipments of soybeans to China for the entire marketing year, which China has been our biggest trade partner for soybeans for decades. And up till about 3 years ago, I think they said one out of every 3 rows of soybeans in the United States went to China. And this year's for 3/4 of the marketing year, we had 0 out of 3 rows going to China. So that's a huge deal. I mean, it cannot be overstated how big of a deal that is for the American soybean farmer.
Sure, and I think the hope there is that the U.S. will be able to recapture a lot of that market share they lost, this year. But as we saw in 2018, the last time the U.S. and China kind of were also involved in the trade war, the U.S. farmers lost significant market share to Brazil, even after there was kind of a truce in that trade war. Is there concern in the soybean community that we may not be able to regain some of that market in the U.S., even if this trade war has come to a truce at this point?
That's surely a concern. In the past 5 to 10 years, China has found a willing trade partner with Brazil, and they have pumped significant money into Brazilian infrastructure. Over the years, American soybeans could always be counted on as being dependable and being able to be shipped and be where they said they were going to be when they were going to be there. And that was not always the case with the South American soybeans. But since China has been putting this money into infrastructure, that they've slowly but steadily Brazil has been catching up to us on dependability. And so that's definitely a concern. But the hope is with the trade agreement that they have substantial numbers built into that agreement that will, at least get us back to 2022, 2023 levels, and then hopefully we can build a relationship and increase from there.
Sure. And while we're talking policy here, earlier this summer, the U.S. Congress passed a budget reconciliation bill that included a lot of support for agriculture programs, commonly known as the Big Beautiful Bill. I'm curious, when you look at that bill and some of the safety net programs in there, do you think some of those programs are going to end up benefiting farmers like you in the next crop season?
Absolutely. There's a lot of stuff in the Big Beautiful Bill that we have been, as the American Soybean Association, has been fighting for years now, as we were trying to get an updated farm bill. The increased reference prices are, that's an enormous boost for the American farmer. That's something we've been trying to get in line with new commodity prices for years now, and it was able to be included in the bill. There also is a lot more money for crop insurance, which is, very exciting. Basically, we'll be paying less up front and getting better coverage on the back end, which is obviously a boom for the rest of the United States.
But, the thing we keep hearing about that is, while those provisions are, very much welcomed across agriculture, they don't kick in until next year. So there's been a lot of talk about, finding some sort of, I think it's been called bridge payment, another way to help farmers, get to next year and remain profitable. There's been talk of various aid packages. Do you think the government will be able to in any way help farmers kind of make up for their losses from this year? And if so, what do you think that should look like?
I have heard a lot of good things on that possibility. I know the administration has been saying for multiple weeks now that they're ready to roll out, I guess, what their package will be, and basically just waiting on the government to open back to let us know what it is. And it's very needed. It is going to help producers that may not have seen next year get to next year. And you pair that with this, this China trade deal, and maybe we can start next year back on an even footing and get ready to become profitable again.
Yeah, that would sure be nice. So, we focused a lot on the on the negative here, but I'm curious. Put out your crystal ball, look ahead. For corn and for soybeans, what are some of the opportunities out there for farmers that you think will help them become more profitable, and even be able to expand their businesses going forward? What's the key to keeping this industry profitable and to where people want to go into the future?
One big opportunity for soybeans is the administration has put forth some new biofuel numbers that have the biggest soy number that we've ever seen, and that would be huge just to create some domestic demand to help us chew up some of our supply, because as Brazil keeps on pumping out more and more, we're going to need to find new windows to where to send our soybeans.
So the last thing I'd like to ask you is, we talked a little bit about policy here. There's between, we've definitely seen a shift in priorities and philosophy from the Biden administration to the Trump administration. If you could send a message to either political party, what policies could they craft that you think would most help farmers like you?
That's a good question. To me, it seems like the more we can be free from government restriction, the better off we'll be. I think if you can make less barriers to entry for new products, such as, I guess, pesticides, fertilizers, and then, keeping markets open. People want American soybeans. We just need to have the markets to be able to get them to them without intervention holding that off.
Sure, and we have seen some deals, or at least some frameworks of deals over the past couple of months. The Trump administration has been able to tentatively reach. I think this week, we had the big one with China. There's deals.
We had a fantastic week this week. We got trade deals with China, and then we got trade deals all across Asia. I think we had a Japanese trade deal. We had a Thai trade deal, and there one other Asian country, which are all, either top 10 importers of soybeans, or, just Thailand is an emerging market that really seems to be wanting to use more and more soybeans.
So I guess we'll kind of leave it there. While there's a lot of challenges here, there is some optimism that this may not be the same situation going forward. I guess, is that fair to say?
I would say you picked the most optimistic I've been about American agriculture to talk to me that I've been in 3 years.
Well, that's great to hear. Great to hear. Well, I think that's about all the time we have. So thanks again, Rob. Appreciate you joining us. Also want to thank our producer, Hans-Jörg Jaeger, for all his work putting this podcast together. In our next episode, we're going to dive more into the changes in trade policy we've seen this year, how those changes are impacting the many segments of the agriculture world. If you like what you heard here, we'd love it if you liked and subscribed to us on Spotify, LinkedIn, or YouTube. In the meantime, if you'd like to read more about the issues driving agriculture today, you can read my work at farmprogress.com. Until next time, this is the Ag Policy Podcast. I'm Josh Baethge. Thanks for tuning in.